Welcome yet to another episode of Leengate Talk. As Leengate, we believe in value addition for all our clients, and we understand that we are building legacies. Legacy means creating a lasting impact, influence, or heritage that transcends your own lifetime. And as Leengate, we are proud to be part of this journey. Today, I'll be visiting First Mutual Life, where I'll be chatting with the Managing Director, Mr. Chibaya, on insurance. Mr. Chibaya, thank you so much for taking time out of your very busy schedule to just have a chat with us today. Of course, I'll be asking about the most frequently asked questions by most of our clients in regards to insurance. Yes. So we wanted to know, sir, maybe we can start right from the beginning. What is insurance? What is it all about?
Well, in very simple terms, insurance is a safety net. It's a safety net against potential losses, damage that one may suffer as a result of an unexpected event occurring. So when you look at unexpected events in life, it could be a car accident, it could be fire in a house, it could be illness, it could be death. So those are the unexpected events where insurance comes in then to be able to help manage the loss.
Okay. In general, we would like to know what packages do you offer in terms of insurance? I understand there are different types. Yes.
So yes, as I stated earlier, insurance, you could have health insurance, which is there to cover the illness or expenses that are associated with an illness. You can have motor insurance, some call it auto. This is to cover vehicles in the event of an accident. You then get covered. You could have also have what we call property, which is there to cover the contents of the house. It could also be there to cover the property as a whole. Let's say there's a fire. You then have life insurance, which then talks to death of the principal member or the person who's paying the premiums in exchange for the cover that you're getting for that insurance. Or you could have illness, or you could have disability also being covered under that. Then you've got insurance that then covers business insurance, which then covers business disruptions that might actually occur within a business. And you then have cover in respect of those disruptions that affect the operations of the business going forward. So we do have a myriad of covers that we actually offer. And interestingly enough, the insurers themselves can also get insurance to cover themselves. So it is quite a number of areas that we do cover. Okay. As one of the leading developers in Zimbabwe, as Leengate, we have so many projects. And the more we develop these projects, we're learning a lot of things. And we do value our clients. We know they're building legacies. That is why we've decided to partner with you on their behalf. Maybe can you explain to the clients the partnership between Leengate and First Mutual Life? Okay. So the partnership between First Mutual Life and Leengate was really to the benefit of the clients. It was to try and promote availing housing to our populace. And availing housing in what ways? Where then does insurance come in when a person is asking? So from a Leengate perspective, the objective is to be able to ensure that you've got a roof over your head and they're offering properties. But as one is paying for that property, for that piece of land that they want to build their property on, there are certain events that can occur in life. One of them, it could be a death in the family of the person who was actually purchasing that property. But what then happens to the beneficiaries or the remaining family? They still need a roof over their heads. The death or passing on of that member does not take away that objective to have a roof over your head. So as First Mutual, we then came in to ensure that the objective is met to provide a roof over the head of our loved ones, hence that partnership. So we are there to ensure that the aspirations and the objective of our people are met by ensuring that the end goal in terms of securing a piece of land that will eventually ensure you've got a roof over your head is actually met.
Wow. So the agreement is once a client is paid 40% deposit, they're automatically insured, and the insurance is in the purchase price of the stand. Can you then explain to us what really happens? Are we saying that if someone is walking out, if anything happens, are they automatically covered, or is there a waiting period? How does it work?
All right. So what happens is that the dynamics of insurance is that you pay a small amount that goes to the insurer, and in exchange of that small amount, you get covered. So the moment a person pays to Leengate their 40% deposit, therein there's a small amount that's going to be passed on to First Mutual, and that amount immediately covers that particular member. So the moment you pay, there's no waiting period. You immediately get covered. So once you come in, make a payment, you are covered, and you don't have to wait for anything. So if something is to happen as soon as you leave the offices, it actually means that you should be covered immediately.
Okay. In terms of beneficiaries, I'm thinking maybe for myself, I'm a grandmother, and of course my beneficiary will be my grandson. I wanted to know, should anything happen to me as the client, what are the time frames? How long will it take for the cover? Maybe you can explain, and maybe what are the requirements, what is needed?
Okay. So ideally, you should then also fill in a beneficiary nomination form as you're actually coming on board to purchase your stand, so that we get to know the beneficiaries, which would then give us a guide in terms of who do we pay. But remember, the first port of call in terms of payment becomes Leengate for whatever outstanding amount. So how does this arrangement work? This arrangement works, let's take for example, you want to purchase a stand which is worth 30,000, right? You pay your deposit, and the sum that we're covering is 30,000. Then, God forbid, a death occurs, right? But when the death occurs, you're probably paid 10,000 towards that property. So there's about 20,000 which is outstanding, which still needs to be paid to Leengate. So First Mutual will come in, they'll pay the 20,000 difference to Leengate. And what it means is that the beneficiaries can immediately now take ownership of that property. But for us to know who the beneficiaries are, then they need to be listed down so that we know who the property is now going to after the passing on of the principal member. So that's number one. And then number two, in terms of the workings and how soon does the payment go out, the payment goes out as soon as the necessary paperwork has come in. When I say necessary paperwork for First Mutual Life to be able to process the claim. So what is the paperwork that First Mutual Life is looking for? The paperwork that First Mutual Life is looking for, number one, would be the death certificate, right? Which is proof that a death has actually occurred, right? Then besides the death certificate, they want to have sight of that beneficiary nomination form, such that the balance can also go to the beneficiaries. They also want the relationship between, when I say relationship, it could be the copy of an ID, it could be if people are married, copy of the marriage certificate, it could be if or an affidavit which is there, which says that maybe this is the spouse, right? And then banking details, both the Leengate banking details as well as the beneficiary's banking details. And then based on that, then we're able to make the payment. And remember, this payment, we make it tax-free. So it then goes directly to the beneficiary's account, and another portion goes to Leengate to then pay off the property that the deceased had actually bought.
Yeah, I think it will make a lot of our clients sleep well at night, knowing that should anything happen, you will be covered, and our families and our beneficiaries will still go ahead and get the stand. But I've got a question that I need to ask. Most of our clients who come in, there's joint ownership, there's trust, there's company sales. What happens in such scenarios where there are more than two principal beneficiaries or members?
Okay. So number one, so the first agreement is happening between Leengate and the client.
Yes.
So that joint ownership says that in terms of transferring the property, it's going into a joint ownership setup. If it's a trust, you're saying that the property eventually, when it's paid off, it gets transferred into a trust.
Trust, yes.
If it's a company, it says that that property, when eventually it's finished being paid for, title then goes into the business. So then the second layer in terms of the relationship is now between the client who's paying for the property and First Mutual Life, right? So the relationship therefore then says that there is a principal member or a person who's paying for the property. So if there is joint ownership on the title side, it's joint ownership on the title side, but from a premium paying perspective or from a contract with the insurer, First Mutual, there is that principal member who's actually talking to First Mutual directly. So what we do is that we cover that principal member, right? So that principal member, when they pass on, we pay the remaining amount. And the property can still then be registered under the what? Joint ownership. But by then, there won't be any joint ownership. There will probably be one beneficiary. So the property goes directly to the beneficiary that was supposed to own the property. The reason why I've got a principal member is that that's the person who's responsible for paying for the insurance. Then when there's a trust, the trust, as I alluded earlier, only comes in at the point of now transfer into the trust. But there's a person who's paying for that property. So the person who's paying for that property, or who's also paying for the insurance cover, is the person that we're covering. And the property can still then get transferred to the trust. So what we're saying is that regardless of the ownership, underlying ownership in the background, what we'll do is that we'll be covering the face behind the ownership that you actually want in the background. And then for business, generally with the going concern for a company, then that's a different setup. If those premiums are actually, or if it's the company which is paying, we then believe that for a company, because it's a separate entity that has got a going concern or capability to be able to move forward, chances are, if probably one of the directors is to pass on, there are going to be other directors. It does not stop the company from going forward. Paying. So therefore, we then say in the company setup, there's no risk then that befalls this arrangement. But when you're looking at joint ownership and you're looking at a trust, you're covering the face behind the joint ownership and the trust itself.
So in general, I think we're saying it's important for our clients to state their principal member.
Absolutely.
Okay. And then going back to the insurance cover, one of the most asked questions are, does it only cover death? What if I'm seriously sick, or something else happens to me and I still can't provide and I can't pay for the stand?
Okay. So yes, as I alluded earlier on in the opening remarks, we can cover an array of events, right? Death, ill health, you can cover disability, or incapacitation. We can cover all that. So in terms of the current partnership that we have, from a rollout perspective, we start off with death, right? And thereafter, if there is need, we will then make room to actually cover disability, to then be able to cover ill health. So I think at the end of the day, we are in a position to cover based on the needs of our client. So this is something that I think depending on the need in the market, we should be able to add to the existing cover that we currently have.
Okay. Then another interesting question. I do get my stand from Leengate. I pay my premiums. I pay my stand in full. Do I get some refund from the insurance cover?
Well, the principle of insurance says, I'm covering you for an unexpected event that may or may not happen. And it therefore then says that if the event does not happen, therefore there's no payment back, because the premiums are also charged, taking that into account, that if the event does not happen, the money does not revert back to the client. But if the event does happen, then the insurer then comes in to pay. So that's the arrangement in terms of insurance. However, if the setup was such that there's what we call a cashback arrangement, then under what we call a cashback arrangement, it therefore then says that if the event does not happen within the period, then some cash then gets paid back. So that will also then require a corresponding increase in the premiums to be able to cover that. But for the time being, in terms of making it affordable to our members, we have made it a no cashback, where we're saying that if the event doesn't happen, then nothing gets paid to the member. But if the event does happen, then definitely the beneficiaries will own the property, and they'll also get a bit of some money then to help them with their day-to-day life.
Yes, and then maybe one other question. One needs to understand, once you've paid your deposit, you start paying your installments. What happens if the client defaults on payment in regards to the insurance cover? Because we can have cases where maybe someone can miss a payment and that automatically affects the cover premium. What then happens?
Okay, so in terms of the insurance principles, insurance, you pay for it in advance. So you don't pay after in arrears, because what then happens is that if you pay for insurance after the event has happened, you then are not going to get covered, right? The insurer cannot then come in. So in this particular instance, it therefore then says that the rules of the game says that you want to be able to pay for your insurance in advance. So therefore, no premium, no cover. So you have to pay and then you get covered. When you fail to pay, then you are not what? You are not covered. So always ensure that your payment comes in and then you are covered.
So there you have it, folks. They have to make sure that they pay their installments to make sure that their cover is updated.
Yes.
All right. Before we leave, sir, I've bought my stand. I've paid for it. I haven't died. I'm ready to build. What other services can you offer me as, as a client?
Okay. So I think as a client, there are a number of services that we can offer. Now I'm now talking to the First Mutual Group as a whole. So number one might want to have money then to be able to start building. We do have a microfinance entity within that can also come in and step in to be able to offer your micro mortgages, if I may put it that way, so that you are able to start building. But on that micro mortgage, from an insurance perspective, we also come and cover you, such that you have borrowed 5,000. If again you passed on before you finish building, but you owe 5,000, you owe about 3,000, we come in and we pay the balance on that 3,000. You've got your property, you've built your property. You also require insurance in terms of protecting that particular property. We also then have a short-term arm, which then comes in to be able to protect the property itself, number one, from any damage that might occur. And then number two, we are also there to protect even the contents of the property itself. Then as an individual, you probably have got medical expenses. We also do have a health company that also then helps cover your medical expenses, or under what I call medical insurance. Then if you then want to save, and then as you're saving, so that you can put more into that property and enhance the outlook and the value of your property, we also do have services that we offer individuals from an investment perspective, such that you are able to enhance the value of that property that you're actually holding. And then apart from that, being able to cover you as an individual. And if you're running a business to feed into that property, we also are there to protect you. So from the cradle to the grave, we are actually there to be able to offer you services that ensure that, number one, you mitigate against potential losses, and number two, you are protected from unexpected events that might actually happen.
All right. Thank you so much, Mr. Shibaya. It's been very educational and very informative. And I hope our clients have learned the benefits of doing business with us. So thank you guys for watching this show. I hope you've heard and you've listened. With immediate effect, all Leengate projects, all our clients will be covered at deposit level. Thank you so much for watching. For those that want more information about Leengate, please don't hesitate to contact us on our website on www.leengate.co.zw, or you can contact our sales team on the numbers below. Thank you so much for watching again. Happy buying, everyone.